really going on in the cloud? What's really going on with software? And it is devastating because these companies, for the most part, have now what's known as elongated sales cycles. They don't get new customers coming in. And then once they have the customers in, the ones they have, they're not taking new products. So you've got a company like Atlassian, again, in free fall today. Costs are just too high because most of these companies never even experienced a downturn. So they have to do some firings. They're not able to do it. Now, we own Salesforce. And I've got to tell you, Jeff, they need to improve profitability.
Yeah, at least with the case of Salesforce, there is some activist pressure there in the form of Starboard. They put out a great presentation a couple weeks ago, basically saying Salesforce needs to do better in terms of expanding their operating margins, generating higher profits. So it's also one of the cheaper names in the group, but still susceptible to the same risks as everyone else is experiencing.
We have to make people aware that this is probably one of the more vulnerable stocks that we have. I think that Meta actually has got less vulnerable. It's worse than the S&P 500. And they're starting to get religion themselves. And the religion means you have to fire. Now, remember, you're building a brand new program, and it doesn't really require nearly as much money as they say. You've got the possibility of Reels losing its principal competitor, TikTok, because of China. And you've got way too much money being spent on Instagram and Facebook. And then we saw the ads this weekend for WhatsApp. So that could be separated. So I think you're going to see that one turn around. Remember, it is the worst in the S&P 500. So there is some sense, but directed to the CFO. The CFO, I think, has made the point to the CEO. Listen, there's basically no hope to the stock.
Yep,
and that was communicated correctly.
Yep, and we also got midterm elections tomorrow. Now, not necessarily a political statement, but there is a belief that markets will rally if there is a Republican sweep. But regardless of the outcome, Jim, could be viewed as a positive clearing event. Markets have been higher from election day to June 30th of the following year in every period since 1939. So there's a strong track record there of gains post-midterms.
And I think that the oils do best because there's been a problem getting pipelines. Pioneer particularly chose not to drill extra, in part because they can't get it to market. So I think the Pioneer may be the best way to play a sweep on Tuesday night.
Yeah, and just thinking about energy in general today, you have oil, flat, nat gas surging. That obviously plays favorably to Coterra Energy, which we bought last Friday on its post-earnings sell-off. Halliburton also climbing back near 40. They could be a perceived winner too if there is more leases for drilling activity and the private drillers start increasing their spending even more.
That they have to get. They want to come public, so they have to show growth. The ones that have already grown are able to do exactly what we're seeing in Pioneer. But the private guys are drilling like mad in order to be able to demonstrate that they have the possibility of getting profitability and drill. I'll tell you, this is not up enough. The note was very, very strong. Natural gas is up. This is a 50-50. Well, I don't know why people don't think this stock is the $30. It's a $35 to $40 stock. It is that well run, and it matters tremendously. Halliburton breaking out. We bought a lot lower, bought some here. I think that's a mid-45 stock based on SLB and how SLB's doing. Halliburton has more exposure to the Permian than SLB does. And I believe that if you see a sweep, both Democrats out in the House and in the Senate, people are going to say time to buy oil because even though FERC is not in favor of pipelines, the new president, if it's a Republican, would be in favor. Now, let's talk over Apple because I spent a considerable amount of time talking to Apple and getting some translation of some Chinese publications, which really helped me. The demand here is very strong for the Pro and for the Pro Max. Those of you who watch football know that the ATT ads are endlessly pushing the Pro and Pro Max. The demand is extraordinary. And when I say that, I mean that they were going to be sold through no matter what. But what's interesting is that I had thought that October was showing a decline somewhat of decline of production. When I do the digging, it looks like that the production was basically at the beginning of the quarter of October down about 40%, and then at the end just nothing. So Apple didn't get anything, and it's hard to be able to say that you're going to get them when you didn't get anything. So it's a definite push out. Now Apple is not a good stock though in this market. None of the FANGs are. But this one, at least, I continue with my own don't trade posture. That's not changed.
And the company said last night, just to back up for a second, that COVID-19 restrictions in one of their assembly facilities in China has temporarily impacted iPhone 14 Pro and Pro Max.
Right. These are the best
manufacturing.
Sellers.
They're experiencing a supply issue right now, not a demand issue.
And there was an article in a publication which said it's a demand issue, and I've got that totally counteracted from my best sources. When I say my best sources, I am talking about people who you would respect.
So what happens here is sales might push out a quarter, but people there won't really be a true demand destruction, because if you're in line to buy an Apple phone, you're not going to switch to a new carrier just because a new phone manufacturer just because you might have to wait a month longer.
Right,
maybe.
but
I'm just saying a month.
Now you have this down
in general.
23, and I mentioned, Alphabet I think is going to have very, very big layoffs. They haven't been announced yet. They were still hiring as of the last quarter.
Yeah.
Once again, we're in, the Atlassians of the world are just horrendous. I've got to tell you that the Twilio quarter was just a disaster. So anything in the NASDAQ versus anything in the industrials, for instance, the industrials remain very strong, which is very odd, of course, because if you're going to recession, the last thing you theoretically buy are cat or deer. But because of all the money being sent via the stimulus, cat and deer are excellent stocks, though.
Well, you think into a recession, you'd want to own Costco, but Wells Fargo, a rare downgrade of Costco this morning. They go to equal weight.
And yet it didn't talk about what we've been working on, which is you have the possibility of special dividend, and they can certainly raise rates. Now, yes, they have determined to pass on inflation. So, if they get a cut in something, and they're calling all their suppliers, say, listen, we see that your freight went down 10%. You're lowering our freight. What Costco, remember, does is on volume. So, this guy doesn't seem to understand the Costco model. Costco model is they want to get club members, and they want to do a lot of volume. And this is easily explained by spending 5 minutes with Rich Clancy, who's the CFO, and I spent a lot more than 5 minutes. And believe me, this downgrade is just a fatuous downgrade.
Yeah, rare to see it. It does have a nice, rich premium, but this is one of the most dependable companies, I would say, in any type of economic climate.
I say buy. We have a much lower basis. We don't need to. And then a story about Wells Fargo. Now,
hey guys, thank you for listening. What I'm gonna do is we're gonna get back to the video in a little bit with Jim Cramer and Jeff Marks. But I just wanted to talk about the oil, as we talked about the oil last week, and we still say that Pioneer, I still like Pioneer compared to all of these stocks because of the dividend. But they did make a buy last week, as we said. They did buy Coterra, which is 50% gas and 50% oil, and you may want to consider getting that if you haven't had that in your portfolio. We're going to get back to the meeting in a little minute, but I just wanted to give a little insight before I do that on Apple. Let's just talk about the two stocks that was just mentioned just before I stopped the recording. It is Apple and Costco. And Apple is still a great price. It is at $137 now. I have never seen it go below that price for the last year. So if you don't have Apple, or if you're considering buying Apple, as Jim says, Apple, buy it, don't trade it. So consider buying Apple, and Costco is a buy. So guys, I shop at Costco. I love to do things that I am familiar with, and the Costco the dividend, they used to have a great dividend, is not as great as it was, but they do have a good dividend, and the stock keep rising, guys. So I'm gonna get back to Jim Cramer and Jeff Marks for the meeting, but I just want you to consider buying Apple. They're still a great company. Meta is still a great company. So if you believe you're gonna be there for the long term, and it's money that you don't need right now, when you're talking maybe a year to 6 months, you could still consider some of these stocks because you know they will be there long term. Let we get back to Jim Cramer and the CNBC Investment Club as they wrap up here.
Wells Fargo is too big a position for us, and that's important.
It's our largest. Yep.
Right. And I don't know if it should be our largest, even though we have a great basis. I talked about with Carl today and David, and what's going on here, just so you know, is that Charlie Scharf, the CEO, is finally getting his arms around all you can see. CFSP, who knew they had $1 billion? There were just so many things. There were 13 consent decrees that had not been completed by the time that Charlie Scharf got there. And he's finishing them one by one. And you can see that they just take forever. So I know this is very good news if they can close this thing. But I also know we're not going to let this gain. Did we do anything here? No. And that was wrong of ours. Remember, We like to say if we're wrong rather than say early because we don't play that game. And this is an opportunity to be able to trim if we get a Republican sweep, which I think is going to drive bank stocks up. And, just so you know, Wells Fargo doesn't have any of the trading, and that's what's made people like it.
Right. More levered to interest rates. Also, their expense base has been coming down. And by the way, this $1 billion reported fine, this was a late story, ran Friday from Bloomberg. Wells Fargo put aside $2 billion in the third quarter for legacy issues. This could be one of the potential reasons why that they already set the money aside. So it's not a new billion coming out. There is a potential here that they've already put aside this money to go to this fine.
I want to reiterate that on a sweep where the House is won by the Republicans and they take the Senate, you're going to get a momentary bump. But you correctly pointed out that markets have been higher from election day to June 30th of the following year in every period since 1939 from the midterm elections.
Good track record.
Right.
Can't really beat that.
We can't. And that means also it's like even FANG could go up in the end.
Yeah. It may not be a straight line, but over the long term,
I know. And when I checked in with Larry Williams this weekend, who's my favorite, who called this rally, he just said, listen, the FANG stocks, they're going to get a bounce at the end of December. So you may think that that's too long to wait. I totally get that. We've scaled back dramatically, but I do want you to know that there could be hope even for those.
Hey guys, let's get back to let me just give you a recap here, guys. So hopefully you enjoyed the meeting, guys. This was Jim Cramer and Jeff Marks. I try to give you that meeting every day, but if you want more information and stuff, please join me on Patreon. Anyway, guys, so I am not much of an election person, so I wouldn't talk about that very much. I think as they say that the election do help in November, as is everything else. But guys, I am not in Wells Fargo, so I'm in Morgan Stanley. So Wells Fargo, I don't try to comment on a lot of stuff that I'm not in, and I don't try to encourage you to buy a stock that I am not in. So guys, as I am in Apple, I consider that. Costco, consider that, guys, and the oil stock, consider Pioneer Natural Resources, which gave the highest dividend. Anyway, guys, if you're enjoying the content, please comment. Please don't forget to comment and subscribe, and please like this video if you would like to see me continue and give you more content. And for more information to get everything stock-wise, please join me on my Patreon. Thank you, guys, and I'll see you on the next video.